Hello, active traders, and welcome to Breakout Trading Success Secrets with myself, Ken Calhoun, and my longtime colleague, Harry Boxer from thetechtrader.com. Harry's a great stock picker. Looking forward to working with him tonight. As always, all information is for educational use only. We're not making any advice about what to buy, sell, or hold.
Okay, good evening, everybody. This is Harry Boxer, the Technical Trader. Glad to be here as usual. Ken is one of my favorite people, and I think together we make a dynamic duo. So when you're at one of our webinars, you're going to have a fun time and learn a lot of stuff. I wrote a book called Profitable Day in Swing Trading. It's basically, my premise was that I use price and volume surges and certain pattern recognitions to catch big moves in the market. That's intraday, swing trades, or even longer term. But the bottom line is though that you have to prepare for your trading day. I'm not going to get into what I usually do because we have a limited time today. I want to talk about the anatomy of stock trading and the anatomy of a day trade in particular. Stocks tend to move in certain patterns every day. And so I'm going to show you some stuff here on some stocks that really had some big moves of late. And then I'll show you some other examples. One of the things that we look for is stocks that are thrusting big time with strong volume. We look for things that are consolidating and stair-stepping their way higher. Now, this is a very unusual circumstance. Stock happened to have happened this morning in pre-market. You can see it traded at $1.20, $1.45 of the thing, got down to $1.32, and then ripped. By the time the stock opened here, this stock was trading at 3.5 from $1.20. It was already up 200%. And yet my people bought this stock because this pattern had developed right here, this wedge pattern. And the explosive move got to the point where so overbought, I told them at 5.5 to just exit the stock real quick. And the stock obviously had a big dump. Although it then consolidated and bounced one more time. We traded it again after this broke out right there. And I told everybody to stop it, either sell it at this level where the stock might encounter some resistance right about there, which it did, and then put a stop under the 4.5 range. Stock stopped pretty quickly, it got hammered. But more importantly, what I look for in the morning is stocks that are thrusting, gapping, moving, things, stocks that have energy. That's the key to my way of looking at things, energy. This morning, the bank stocks had a really big move, and I don't usually trade them, but with the kind of earnings reports that both Goldman and Bank of America came out with, I thought they would for us to maybe be dangerous. So let's look at G-stars. Look at Goldman Sachs this morning, pre-market, it was already and then it pulled back and forth. I said if it takes this line across, out across here, this is where we went long. The stock then had a little pullback breakout point right when the market opened. That low on this pullback was 186.25. My targets were 188.9 and 194.5. We reached target number 1 there. We reached target number 2 there, and then the stock kept going up to my third target was 198. The high was 198.07. Pretty much nailed it. Fantastic trading day for a stock to go 184 to 198, 14 points, and we caught the majority of that move. Bank of America is another good example. Well, what I look for every morning is stocks that are thrusting with energy, stocks that are thrusting with big volume surges above average daily volume. In the case of B of A, after the earnings came out, the stock blasted from the wedge, stepped up its way higher. By the time the market opened, it was already here. Some of us had gone in pre-market, some went in after about 27.85. The stock got to 28.71 for a nice stay trade, nothing huge, but you can see that it trended all day, and only at the end of the day when it broke, they actually never did break that, did it? Yeah, right about there, towards the end of the day, right at the close, it traded right at support, and so some of us sold it there. But I'm a big believer, if you're day trading, you're going to get in and you're going to get out the same day. And also, we're looking for channels and trends. Most stocks will form channels and trends. Look at this one, and kind of interesting, they've always go up in this kind of a 45-degree angle. Goldman Sachs actually was trending in a much sharper angle right there. This morning, if you take a look at the way I drew this, this actually was trending up in this angle very steeply at some point this morning. See it? And then settled back. It never really broke support other than taking this sharply a rising trend line out. What we normally do, and what I tell everybody in my room is to, I give you targets, I give you stops, I tell you where to raise your stops to as the stock moves up. For example, in this case, the stop was under here. When it ran up and ramped and pulled back and started to move, we put our stop there. Stop there. It never broke any of those stop levels all day. And at the end of the day, you could have sold it near the close as it ramped up to 198 and change from where we entered around 184 and change. This was today. Another stock from today was BILC. This was pretty intriguing. First, it took a little pop at the opening and pulled back. I didn't get excited about it. There wasn't enough volume. But when the volume came in across the air, we went in long, just about the $2 range. This is unusual for me because we don't talk about stock under 2 for the most part. So I believe, in looking at this again, what happened was we waited for the pop and pulled back and then bought the breakout around 210. Popped up and flagged and then exploded. And on this explosion, I got my people out around 315. It did make it up to as high as 360, 372 actually, before rolling over and getting slam dunked all the way back to 2 again. We had a stop in for those who kept it long at about 330, 333. Once it broke that and formed that bear flag, it was done. And then you see the rollover and another bear coil and yet another large bear coil, and it kept going down. Finally, at the end of the day, it rallied back to resistance and backed off. Perhaps something to watch if it does break out above 265 in the next few days. But the key is looking for big volume thrusts, pullbacks and wedges and flags. Something like this looks like a falling wedge or so. Right there. Flag, wedge, whatever you want to call it. It's a consolidation mini 1, 2, 3, 4, 5-way move. Very low volume. At the apex, it barely traded right there. Very low volume, and then pop goes the weasel. That thing popped out with volume. Volume picked up dramatically. It was definitely a buy there. It paused for about 20 minutes to form a flag, held the moving averages, held this trend line, the sharply rising one, and just exploded to the top of the channel. When it reached the top of the channel, is where I told my people to start to peel back. Now, I want to talk to you about trading philosophy. It's amazing to me how many people will buy all of it at once and sell all of it at once. There's no reason to do that when you're trading. You can buy, for example, if you wanted to buy the breakout and pick up a third or a quarter position, watch it pull back and hold support and breakout and add to your position. And then watch it pull back and break out and add to your position. Why not put a third, and then run it up and sell a third, sell a third, sell a third? And that's what we try to do in our site. Anywhere between a quarter and a third position we're entering, and adding a quarter to a third position. We add up, we don't add down. I can tell you right now, the biggest way to lose money is to average down. To average up, not down. The biggest money I ever made in my life is when I bought a stock at 17, added at 27, added at 47, added at 67. So I go to 120 all within 6 weeks. That's the way you make money, not when your stock is 17, drops to 15, you add more, goes to 13, you add more, next thing you know, it's $5 a share and you're sitting with a big loss. We do not do that in my site. Every trade I put out, I tell you what the targets, where the stops are, and I tell you when to raise. In my site, thetechtrader.com, and by the way, you can join for free for 2 weeks with no credit card. Just come on in and check it out. You'll be thrilled with it. In my site, I tell everybody to wait for the first 10 or 15 minutes. I'll give you an update. I come on before the market opens and spend an hour with my people from 5:30 to 6:30 LA time. The market opens, just before the market opens, I'm off the air. I wait about 10, 12 minutes. I come on. I tell everybody what the early patterns look like. The stocks that we put out there. Now, I create in the morning before it opens, we call it a focus list. Anywhere between 8, 10, 15 stocks that I are thrusting pre-market and have maybe some good news behind it that can be potential good day trades. Like that Goldman Sachs or the Bank of America or the BILC or some of the other stocks that we showed you. There's a couple more besides the BILC. Scientific Games is another. The stock popped and formed the wedge. We bought it on the breakout. Pulled back and held the support right there. Formed the wedge, broke out. Made a new high and pulled back. And then had a rising wedge. Look what happened once it popped out of this rising wedge. It almost went vertical from 22 to 23.5. But net from where we got in at 21.5, 2 points. Nice day trade. That was today. Well, in the morning, there was some news on Scientific Games or something. I forgot what it was, but the stock popped and pulled back and formed that beautiful wedge, and that's where we went in when it broke out. That's what I look for. Every morning I look for a thrust followed by consolidation, low volume ebb near the apex. And once the volume picks up, we buy it. Now, in this case, it was a quick scalp trade if you were quick enough, and then we saw it pull back, but it did not break support. That's the key to trading. Stock doesn't break support, you don't have to sell it. Everyone gets nervous when the stock pulls back. What you really could have done was added here, and when it broke out here, added there. When it broke out there, even added more. There was no reason to sell the stock. It never broke support all day. Even here at the end of the day, it still held this line. Well, actually, support was probably right there. It may have just violated it slightly. But what it did form was an end of day kind of falling wedge. Wouldn't be surprised if that was up tomorrow as well. And if it is up tomorrow, my target's 24.5. See the way this works? I've been doing technical analysis and charting work for 55 years. I'm 72. Been doing this for a long time. I wrote a book on trading called Profitable Day in Swing Trading. You should check it out. It's in layman's terms. It's easy to read. It will benefit your trading, I guarantee it. And come into my room for 2 weeks and you'll be stunned. Besides Ken Calhoun, I think Ken and I are two of the people that use gap and run type day trading, and it really works. But more importantly, it's how you interpret a chart pattern. All day I come on in videos. All day. Every hour, 45 minutes, I update you on what the current patterns are looking like, how they're progressing, which ones are setting up for a breakout, which ones are broken down or stopped. And you'll hear me comment nonstop all day in the room, verbally, in written form, by posting in the room constant updates on stocks, whether it be news or technical timing, whether it be the updates on support and resistance on the NASDAQ 100 and S&P 500. Those are the only two indices I follow. I don't follow the Dow, although I look at it. And only on weekends do I give you the updates. And by the way, at the weekend, I do a 90-minute webinar every Saturday morning, 8 o'clock LA time, 11 o'clock Eastern. 90 minutes chock full of longs, shorts, technicals, indices, all the underlying technicals for those indices, and I give you a complete rundown so you prepare for the week. So I think the techtrader.com is the place to be. Now, some more examples of stocks that were that have been really good runners for us in the last few years, and you can see why we picked some of these stocks. Here is AFOP. Take a look at this, pretty intriguing. Stock popped, ran up a little bit, and pulled back and formed a little wedge. When this line came in right there, it popped out. That's where we bought it, at about 25.5. Ran up and formed a little wedgie, another wedge or coil. Ran up again and formed the flag, but all day it ran up in a rising channel. This is the kind of stock you want to be in. I call it a day trader's dream. Why? Because you don't have any stress on a stock that doesn't break support. It just keeps pop, consolidate, pop, consolidate, pop, consolidate, do it again and again and again. If you bought here at around 25.5, 5 hours later, you're looking at 28.75, and no reason to sell that stock at any one time. There's some people in my room that are golfers, professional golfers, that are good stock traders, and what they do, they come in the morning, take a couple of my ideas, put the targets and stops in, and go play golf and by the sixth hole, check in and see how much money they made or lost that day. And I would tell you that 80% of the time you're making money. Because even though it's no fun, it takes the emotions out of it. You don't have to be paranoid or be excited or nervous about every tick up and down. I think the problem with day traders is they watch the stock too closely. They watch every tick. I do it because I need to. I need to do that for you guys. Some more examples. Now look at this one. This is a beauty. ALNY exploded with a major breakout. Check this out. They went from 75.5 to 98. That's 24 points on the opening first, and then pulled back and formed a wedge. It got very quiet near the apex, hardly traded, and then cruised all the way up from this level. This is amazing. From 90.5 to 118, $118. That's right. 28 points. Never broke support. Here, 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 or there. Finally, it broke there. You could have been stopped out at 113.5. But that's what I'm talking about. When every once in a while you get a stock that does this, just ride it. Ride it all day. Keep raising your stops. You can also sell in tranches. If I have to recall having a target at 90 and 110. So at 90, I mean at 100. So at 100, 98, I sold it there. Some of us sold some more there and some more there. Because that was my final target, 108. I had no idea it was going to go up to 117, 18. But if you didn't sell it at my targets and you just kept raising your stops, you wouldn't have been stopped out until there. A perfect example of day trades that work. And there's every day there's stocks like this, every day. This was today, Scientific Games, Bank of America, BILC, even little TMDI, thinly traded, traded 800,000. Look at the opening pop and wedge. See how almost quiet, it almost stopped trading right in there? And then it popped right there. That's where a bunch of us went in at 240. And then in an hour, it was 270. And then it coiled or consolidated the flag for 3-4 hours. At the end of the day, 290. Not so bad, 240 to 290. 50 cents, a $2.40 stock is 20% in one day. The recreational vehicle stocks like Winnebago and Thor were removing today. This one popped sharply and pulled back on a wedge. When it broke out of the wedge with a little gap in here, that's where you went in for a little trade. It went from 30 to 30 3/4, pulled back, and then it got up to about just under 31. It wasn't a big trade, but it was a nice scalp trade. Thor was another day trade. Oops. That popped big time and then pulled back in the falling wedge when it broke out around 62.5. Some of us bought it, went up to 64, pulled back, actually held support right there. See it? Pulled back low, and this low, and that low all held. And then a lateral consolidation formed. There's your breakout. At the end of the day, could have got another scalp on it. But in no time did it break support either there or even there. So it's a good day trade there. Some more examples of stocks. And this, I have hundreds of charts, folks, that tell me the same thing every day. Hundreds. You know what's amazing? A lot of them are biotechs, and the biotechs tend to run a lot. I think you'd be shocked. You just saw ALNY. Here's another one. Bold, B-O-L-D. That had a nice little base pattern the day before. Popped in the morning from the little wedge in here. See it? Broke out it from the larger wedge. And then this is where most of us went in, about 36.5 3/4. Within an hour, it was 39.25 from the wedge and broke out. And by 3 o'clock, it was 42 3/4. So from where we got in, 36 to 42, 6 points right there. Notice it never broke this level or that level. And even at the end of the day, it was holding on to the trend line, the parallel trend line. So my theory, and Ken's, pretty much Ken's as well, is that stocks, when they start to thrust in the morning, especially with big volume, now we want volume 5 to 10 times normal. Now, the one thing about the charts that I use, which is TC2000, is that they have something called, let me show it to you, volume buzz. You can sort by volume buzz too. Today's volume buzz leader was BILC. 2,616% more volume than average. Now, that was at the end of the day. During the first 15, 20 minutes, if a stock has, you might see 5 or 10,000 times more volume than average. You see that, and by the way, that's an average of the volume at that point in time. So if I'm looking at 15 minutes after the opening, it'll tell me what that volume is at 15 minutes after the opening compared to what the volume is at 15 minutes after the opening on an average over the last 100 days. So you can tell whether this is thrusting way above average with volume early on, where there may be really some big interest early in a stock. The stocks that tend to thrust early on tend to channel or trend all day. Now, they may not, but at least they're trades. Some other examples of stocks that we have been constantly trading. Here's an interesting one called Polarity. Symbol is cool. They changed their name recently, so this is an old chart. You can see that pop and wedge. This is a 2-day chart, by the way. Pop wedge, pop falling wedge, pop coil, pop 3-wave correction flag, pop wedge, pop flat. Look at the stock. When a stock tends to do this over and over and over and over, it tends to be what we call continuation patterns. So this is a pop wedge breakout. This is where we bought it, around 27.70. By the end of the day, this stock was trading at 31 and change. The next day, it coiled, broke out, and went up to 32.90. Sometimes you hold for 2 days. Sometimes you just take a look at the 2-day chart and just continue with your trade. Some more examples. Brooks. Look at this pop. Now, how many people, after watching the stock go from 17.75 vertically to 19.25, would be an aggressive buyer there? I tell everybody to wait for the first consolidation. Well, take a look at this perfect little flag. Now, right at the apex of this flag, the stock got very quiet. And then this one bar showed up there. I broke it out right there. And then it flagged, and then it coiled, and then it kept flagging, and then it kept going up. And basically from where the breakout was, where we went in around 19.15, it went up to 21. It was a nice couple point trade. But notice it never broke a prior pullback low. Here, there, anywhere at that point, here or there. So finally it broke there. But my point being is that when you're in a stock that's trending, let it trend. Don't sell it too soon. The number one question I get in my site always, how do I stay in a stock? I sold it too soon. You sell it too soon because you see a profit and you're afraid to give it up. Keep raising your stops. If you sell a piece of your position, for example, if you have 1,000 shares and you sell 300 and raise your stop, what's wrong with that? And if it goes up to the next level and you sell another 300 and raise your stop again, what's wrong with that? If the stock happens to stop you at then, at least you have a nice profit for the day, even though you didn't get as much as you wanted to. You are not losing money. The worst thing I can't stand is when someone tells me they ran a stock up and they ran it all the way down. You cannot trade stocks, particularly day trades, on stocks that are trending like this, or any stock for that matter. You cannot trade without a stop. If you're trading without stops, you're committing financial suicide. A couple more examples. We'll have to finish up. It's Kenny's turn to come on and give you his best. BlackBerry, way back when. Check this out. I love this chart. So in the morning, this is not even in the morning. This is in the afternoon. This stock did nothing that day. All morning, it got quiet. Then all of a sudden, at lunch hour, it spiked up and formed a little flag. When it broke out here, we went in at around 9:30. Popped to 9:45, flagged again. I wasn't worried. It did not break support. Notice how it hugged this dotted line, the white one? That is the 21 period moving average. When a stock is that strong, it's not even testing the 50, then you know it's got power. But on a 1, 2, 3, 4, fifth wave spike up, Elliott wave theory, 5 waves and you're out. We sold the stock on a spike up around the 980, 85 area and watch it come back down to 9.5 before eventually getting up to $10 or near it, 9.95. But you see how this stock never broke this low or that low or that low or even that low? It just kept moving up. And at the end of the day, even formed a big coil pattern. So this is how you stay in the stock. You raise your stops. Now, you don't need to even ask me where, because I'll furnish that for you. When I come on and do my videos every half hour, 45 minutes, I'll show you the updated pattern, where the stop, where the support might be, where you might set your stop. And folks, when I tell you to buy a stock, I'm not going to tell you what penny to buy it at. I'm going to tell you where support resistance is, where the breakout is if it goes, and where the targets and stops are. If that's not good enough, I'm sorry. I'm not going to I'm not going to press the button for you. You need to do that on your own. Wear your big boy and girl pants. So just a few more examples and we'll finish up today because, as I said, you want to hear what Kenny has to say. BZUN, look at this chart. In the morning it starts off with a run up and a pullback and formed a little coil. When it broke out here, we bought it. Didn't do much for about 20 minutes. Actually pulled back. Then boom. But notice it never broke this line or that level or this level or that level. It just kept trending up to the point where when we got in about 40.5, hours later it was 48.90, 8.5 points there. Once in a while you get those runners. And when you do, you got to milk it before you can. And one final example, and we'll call it good for today. Little CLDX is another perfect example of a stock that, I mean, you know, how many charts do I have to show you like this for you to understand that these occur every day? I'm not making this up. This is not a made-up chart. It popped and wedged and then broke out. We bought it there. It then formed the flag. We bought some more there. It then broke out above that level. Could have bought some more there if you wanted to. Notice this line and this line and that line. This is called a upper channel and a lower channel. Obviously, for me, when a stock breaks the upper channel, I'm usually out of at least half, if not all, my position. Then I put a stop under the last pullback low. So I would have sold some near the upper channel. I would have sold some when it stopped out. Probably would have got the rest out under 21 or 20 and a half, 20 and 3/4 range. But anyway, the bottom line is our entry point, 19. So a nice point, buck and a half, $1.75 trade. But the best part about these trades are they're what I would call low stress trades, because once they trend and they start to trend, all you have to do is monitor them and go cha-ching, 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 right? They keep making money on stocks like this until they break down. Looks like we have time for one more. I'm going to talk about one more. AQ, this is an interesting stock. And then I'm going to turn it over to the Ken man. Now look at this. This is interesting. So it popped and pulled back and then started to run. Where do you buy a stock like that? Well, I always tell everybody, once a stock pulls back and doesn't take out the gap, or if it tests the gap or makes a higher low and starts to move with any kind of volume, go in. So some of us went in here at about 12:30. They ran up to 12:70 and pulled back and took another hour. So it was a bit of a torture. But look how quiet it got near the apex on low volume here. Very low volume, hardly trading, low little bars, and then boom, vertical from 12:35 to 13:20. Now, you could have sold some there or waited a few hours, but eventually it was 13.50 by the end of the day, a nice little day trade. And so, folks, just to wrap it up, at thetechtrader.com, and I've been doing this for 55 years, I'm a big believer that technical timing and technical trading is the key. I know there's all kinds of talk all day on my site. Why is the stock up? Why is the stock down? Here's the news. This is why. No, the reason why is because there's more buyers than sellers, more sellers than buyers. Simple as that. Human psychology is that you want to feel good about something because of the fundamental story behind it. The biggest way to lose money, let me wrap it up with this. The biggest way to lose money in the market is to get so close to a company fundamentally, you love the story, that when it comes to time technically to sell it, you won't do it because you'll say to yourself, you know what, it's pulling back, it'll be fine, they have a great story. It doesn't matter what the story is. It only matters that you can make money on a stock based on technical timing. And that's it for me today, folks. I hope you enjoyed the little presentation. Feel free to come into my site. I have a surprise for you. 2-week free trial, of course, with no credit card necessary. But even if you don't sign up, we will send you a 2 DVD set, one on day trading, one on swing trading, yours to keep, just for coming in and spending a couple weeks with us. But I think the vast majority who sign up are going to stay with us. Most people told me that the first 2-week trial, they made enough to cover their subscription for the year. No. It isn't that expensive. It's a pretty cheap price for considering the amount of service that I put out there. And people who know me say that I'm the hardest working guy on Wall Street. I love it. I love what I do. I get up at 4 a.m. in the morning. I'm on my site by 4:20, and I'm servicing you guys all day. Thanks for having me, Ken, and good to talk to you, folks. Feel free to come in and check us out.
Hey, thanks so much, Harry Boxer. You are the best. You're one of the best people out there in the whole industry. So I PM'd Harry, I could listen for hours because he's the only other person that runs a live room that I would recommend. And that's high praise coming from me since I've been running my room for 20 years. Anyway, Harry Boxer is absolutely brilliant. If my life depended on my ability to learn new things from somebody out there, Harry Boxer's your man. And it was amazing at we were both speaking at the New York Traders Expo, and his book sold out in like 8 minutes or something. It was a sight to behold. So ask yourself, how much money could you make if you traded, say, MBOT either today on the pop or yesterday? We have such good volatility and volume in these instruments. Makes a lot of sense to focus on. What I want to cover today is I'm going to pick up where Harry, I have so many points of agreement with what Harry teaches, and I wanted to give you some of my best momentum plays in our current markets. I'm not going to do swing trading today. It's going to be all about intraday trading. We got some outstanding charts to work with. One thing that's unique that I like to teach traders is how to use a couple things. One is tape reading, and it's really important. If you're looking at time and sales live in the markets, how fast does price action go through each 10-cent window? Harry's exactly right in things like buying right after a bull flag or a wedge or whatever you want to call it. What it comes down to is a lot of different patterns. And you know, I like making money with instruments like UGAS and DGAS. I trade pairs. Here's another quick tip. Look for trading opposite instruments, what I call an arbitrage. It's something one of my Wall Street traders, a market maker from think it was Solomon said when I was doing one of my day trading seminars back at the MGM in Vegas, the ARB approach is something that's favored by Wall Street pros that they don't tell you about, right? Nobody tells you guys this. Trade one against the other. And I was telling Harry about this before today, and he mentioned it's a lot like, the options play where you can do the same kind of thing. You could put on 100 shares or 1,000 shares, whatever, and you guys sell the first sign of a pivot. You buy the first sign of a little breakout or above previous day's high, sell the first sign of a drop, and then at that time, what I'll often do is I'll then flip channels and go buy the opposing instrument like DGAS. Now my favorite pair, because these don't always run, my favorite pair to trade, my favorite day trading instrument is TVIX. My best day of the year was I made just over $1,000 scaling into it, and Harry's exactly right. You should not do all or nothing. I want to look for points of agreement that we both agree on, which is just about everything, but I think it was a few weeks back when it had a really big multi-point run, and it was one of my most exciting trades of the year. I think it was back here, in fact. Anyway, ran up something like 8 points in a single day, and I was position sizing or scaling into it, and I sold within 40 cents of the top, and that, my friends, is exciting. I was in a total of 300 shares and up over $1,000 because it ran up many points. And I'm a real money trader with lots of P&L proof that I'm a real money trader, but the point is, arbitrage plays where you look for the first sign of a breakout or a cut pattern breakout in something like TVIX. You go long. Now I always sell the high and buy the pivots in TVIX. It's one of those odd instruments that doesn't follow classic breakout trading. But when I sell here, my eye automatically flips. I'm looking at the 1 minute close-up candlestick chart to the opposing instrument. In this case, I trade TQQQ against TVIX because they have the exact opposite chart pattern. So when TVIX dropped, this thing spiked. When it started to drop, TVIX had its big recovery. Now I was trading this on the way up today, and I sold it, I think it was like 46.30, so pretty close to the frickin' top because it was right above a cut pattern high. And I know from experience, you sell the highs in TVIX. So those kind of patterns, combined with some of the small cap runners, like MBOT, or Harry mentioned this one too, TBLT, one of my members at Trading Open. I run www.tradingopen.com. I'm also president and founder of Day Trading University and Trade Mastery. You may have seen me in Stocks and Commodities or Money Show. Anyway, for most of my trading career, I've avoided stocks under $10 because they tend to be pop and drop, thinly traded, easily manipulated, front run, all that kind of shenanigans. So safety in numbers. But since October, I've been trading the small caps more aggressively. I also like trading instruments like the pot stocks like TLRY and Canopy Growth. We got so many good patterns to work with. One of the things that I think can help you as a trader is to learn to recognize patterns as they occur. Let me give you a quick, I'm not going to do any PowerPoint slides to speak of tonight. Let me show you just a couple that I worked up for my members. I've had thousands of members. I've ran Trading Open, celebrating our 20th anniversary since 12 August 2000. These are the only two slides I'm going to share with you, and I'm not going to read them, but there are some top chart patterns. And like Harry, all of us professionals, small gap runners, minor, by minor I mean less than 10%, like 50 or 80 cents or a dollar, or something like that. A small gap that runs up is the #1 best pattern. Number 2 is open range breakouts. Harry talked about wedges or bull flags, 2-day high breakouts, pivots off prior support, momentum runners. Minor gap continuations should be at least, say, 60 or 70% of your trade setups wherever possible. Something that Harry mentioned that I completely agree with too is what I call intraday swing trading. And that's where you let a runner, and I will scale out usually. I'm like Harry mentioned, and I completely like this too. I'm an old school day trader. Something runs up 80 cents and I'm in a few hundred shares and it starts to pull back. I'm going to sell it, take the money and run because I can always rebuy a new high. But I've learned to be patient. I should say I'm learning to be patient. How many of you, show of hands, are not noted for your patience? I think in today's YouTube society, I can't even watch a frickin' movie, the whole movie. I watch about 20 or 30 minutes at a time. And if you're a day trader like me, it's very, very tough to resist the temptation, like Harry mentioned, about taking profits early because that's what I'm hardwired to do for 20 years, and millions of dollars worth of stocks and ETFs traded. But I've started experimenting with intraday swings, and it goes a little something like this. I'm a jazz musician too. I play a badass tenor sax at tradingjazz.com, www.tradingjazz.com. But the point is, you put on the trade. Here's the setup. Let me look for something. Let's see, where's a good one? I often trade things like Twitter and Momo and Western Digital. This is one that that Harry had mentioned earlier, BILC. The trade goes a little something like this. And here's Momo, one of my favorite day trading stocks. You put on the trade early, preferably above the previous day's high. Put a stop in, say 30 to 50 cents under the low, and then walk the blank away. My biggest fails have been selling too soon at the first sign of a pullback. And so I will come back no sooner than 3 o'clock. One of my buddies, Tim Berkwin, who co-founded the Traders Expo, mentioned the same thing. It's like not watching it all day long is probably a good idea. And I completely agree with Harry and Tim. Both really good guys. So what am I going to trade tomorrow? Most of these are kind of crappy charts, right? So I've been spending a lot more time with the ETFs because they've got spectacular volatility. Be on the lookout for cups, right? One of my favorite patterns is always to look for the first sign of a cup breakout. And don't get faked out by going in right above the whole number resistance. Wait till 30 to 50 cents above the high. But anyway, if you put on the trade there, the old me would have sold right here in a heartbeat, because if it's up 2 points, I'm a happy camper as a day trader. But the new and improved me will still sell about 2/3 of the trade. I'll lighten up 2/3 of the position. If I'm in, say, 200 shares, I will absolutely positively sell 150 there, let the other 50 ride with the stop, at break even or slightly under support, and then come back around 3:30 and say, hey, happy days are here again. I didn't give up profit, and I even made some money. So that's one strategy you can use, is intraday swing trading. Now, what Harry had alluded to also, which is another brilliant point, is 45-degree angle breakouts, and those are the best continuous plays. I was hoping for a play in Citigroup today because of that pattern yesterday. This is normally the best setup. Today, not so much, but you see a 45-degree angle type breakout followed by a minor gap, and you buy above the high of that, and often that will continue to run. This one didn't today, but memorize this pattern nonetheless. 45-degree angle breakout, small gap, buy it, say 30, 40, 50 cents above that, and let it go. And often that will work out. This particular chart notwithstanding. When you're trading the ETFs and the ETNs, do be aware that there's a lot of them to choose from. And from a dollar standpoint, I've been trading millions of dollars worth of stocks and ETFs these past years, and I've been trading more with the ETFs, more volume with the ETFs, because for swing trades, they don't gap, right? Or not very much. So you don't have to worry about earnings misses. You can also arbitrage play them against each other. I'll often trade, for example, LabU versus LabD. These are the biotech triples. Okay, and I was trading this one successfully today. Booyah! I trade LabD better than LabU for some reason. But anyway, LabU is the up or the long version of the biotech triple. And again, if you buy, you let it run up to right under whole number resistance. If you're a candlestick trader, which I often will look for, you may see, I don't know if this one has one offhand, you may see a shooting star bearish engulfing. I don't see any evidence of that on any time interval here. But the point is, you can trade these against each other. And I firmly believe, and I'd love to hear your guys' thoughts on this. What's your initial thoughts, by the way? Or just give it some thought to yourself. In addition to position sizing and tight stops, I believe this is the key to success in intraday trading, is trading something that's guaranteed. The only guarantee in the stock market is things will move, and you'll lose money if you don't use tight stops. But the only other guarantee, I used to be a corporate statistician for the Ford Motor Company, and I'm a hardcore numbers guy. And they're great people at that company, too. I kind of miss that. But the point is, that's the only guaranteed correlation, is the up and down leveraged, especially ETFs. So, if I'm long LabU, let's say I buy, typical is I might say buy 49.30 and sell 49.80. I'm not going to get the whole piece, but I may get 40, 50 cents out of it. But the instant I see a pivot like that, I'll put on the opposing trade. I use buy stop limit orders. So I do like buy stop 25.80, limit 26. Let it shake and bake, walk away once I get the order fill, put in the stop at say 25.50, then come back in the afternoon and fight the temptation to watch the bloody thing all day, because I always give back 100% guaranteed. I'm Ken Calhoun. I take early profits, way the F too soon. Does anybody share my pain? That's my agony, is if I'm in the money and it starts to go back down, like Harry said, the temptation is, because I know from experience, half the time it'll do one of those. So yeah, selling there would be smart, but another part of the time it'll keep running up and you leave money on the table. So scale out is the solution. Still sell some so you get a warm and fuzzy. Use a break-even stop on the remainder. Then turn the blanking computer out. Well, I'd never turn off the charts or minimize them so you can't see the charts or your broker interface. Then come back at 3:30 or so and follow that. There was an interesting interview with one of the world's top hedge fund managers on a financial news network, and he said that they trade billions of dollars worth of stocks a day after 3:15. Now you often get, here's a quick tip for you guys too. And it's a real honor to work with Harry Boxer. He's the other guy who's great at this. He's the only other person that runs a live room that I'd recommend. The only one. I've seen them all. Most of them are crap, but Harry's great. He's brilliant. So I learned from Harry myself, which is saying something, because I've been around 20 years and I'm an old school ace at this too. Anyway, point is, pivot times in the market. Pivot times, often 10 o'clock. You got your lunchtime buy and sell algorithmic quant programs that kick in 11 to 12, and often right after 3. So be aware of those pivot times, and those are times that I will tighten in trailing stops on open longs, because oftentimes you'll get pivots. We've seen that especially in this market, right? You get a kind of a fake out to the upside in the stock market, then it stalls at either 10 or 12 and then plummets for the rest of the day. Be aware of those times to close out trades. Now you can always do under 10-minute classic momentum day trading scalps, but I'll be 55 years old this Saturday. How the F did that happen? Anyway, the point is, the older I get, the less I like momentum scalping, and I like going for bigger money plays. Intraday swing trading is kind of an intermediate, if that makes sense. Pre-market prep, check your futures. Look at current gappers and previous days big movers. Watch list in my live trading the open room alerts box, and then set entries in a demo account and make it work. One thing, sometimes, when you're trading, you get disappointed and you take stops. Does that sound familiar? Sometimes you just got to say, what the heck, right? And, if you're dancing, my favorite dance scene of all time, John Travolta and Uma Thurman in Pulp Fiction, a great movie. Anyway, greed is good. What are we going to do? Well, we're going to try and make some money, right? I want you guys to all experiment with this, whether it's with me or Harry or whoever. You have my word. This is, again, I'm a former corporate statistician. I'm a balls out, balls to the wall numbers guy. I firmly believe that trading the only guaranteed thing in the stock market intelligently is part of the solution. And trading things like, say, TVIX, TQs, frankly, isn't as much volatility as I'd like, but SVXY isn't as good. That's the inverse VIX ETN. I used to trade VXX mostly, but TVIX got more volatility. So anyway, multi-point ranges, that goes up, this goes down. And I believe there's a hint of genius in there somewhere. The only thing is, what do you do about shaking, say sideways days? There's not much you can do about that. So what you got to do is figure out a methodology designed to capitalize on that inverse relationship. And I honestly believe that's like a trifecta. That position sizing and small stops, along with strong charts, is a real, the key to doing this the right way. Because look at that. D guys looks like this. You guys looks like that. How do you exploit that? How do we collectively exploit that? And I'd really love to hear you guys' thoughts on this at some point. Because I firmly believe there is a boatload of money to be made. The algorithmic trades, the algo and quant trades, they got all this stuff wired with Boolean operators and math and all that crap. But how do you and I, as traders who are watching the dang charts go up and down, figure this out? And, there is some exploitable edge in that knowledge, right? So I honestly believe that. Any thoughts on that? What's your first think? The only thing, like position sizing, doesn't work if you got sideways choppy market. So, for example, trading UGAS versus DGAS would not have worked yesterday because the flipping didn't go anywhere. So it'd be stop city. So how do you capitalize on the big runner days? And that's the nuance. Just like position sizing works brilliantly if something keeps going up, you just throw off trades and add in. But you and I both know that sometimes you'll get a chart like this. So you'll buy there, you'll wait for it, or you take a stop, and that's kind of it. Okay, well, game over. What about charts like MBOT? Bull cup breakouts, really smart to look for. Bullish cups add what I call a safety buffer. I was trading this today too, so I traded it yesterday, but I didn't get as much a big piece out of it as I should have. I sold way the blank too soon. But anyway, so I need to be more patient. And again, check lunchtime pivot. Do you see what I'm talking about? Here's lunchtime. Check in with your stock at lunch, because if you bought here and then came back at 3:30, you'd be hosed, right? So that's not good. You'd like say buy here, put a stop there, come back and find out your stop loss got hit, and you could have made a boatload of money had you checked in at lunchtime. So use a one cancels other trailing stop approach, or something else that can get you out of a trade near the middle of the day for intraday swing trading. Because how would you feel? What would be the number one word you would say if you bought 13, put a stop at say 1180, then walked away and said, I'm not going to watch this all day because that'll get me in trouble, and you come back later in the day and you say, coulda, woulda, shoulda, right? Or as my friend Homer would say, dope. I hate when that happens. One of my favorite TV series, the best TV, is from the 1960s. Missed it by that much. Sorry about that, Chief. Bum ba dum bum. Booyah. Well, anyway, booyah this. So what you want to do is check in around lunchtime. You may see you get a little H&S going, right? That's it. Let me get rid of this vertical line. That's a head and shoulders pattern, right? So the stop loss would be, I'd stop right there, say 1650. That's in fact where I called it for my room members. I said 1650 would be a trailing stop. So anyway, that would have locked in a nice healthy gain. Be sure that you're looking for these kind of patterns intelligently. But anyway, the best ETFs to trade when they move on hot days, I trade TVIX and TQ every single day of my life. Every single freaking day. I would trade both of them. I trade TVIX like 10 times more often than I trade TQs, by the way. I trade TVIX aggressively. I buy the dips and sell the rallies, which is rare for me because I'm a breakout trader. I'm the other great breakout trader. I buy high and sell higher. That's what I do for a living. But TVIX has its own set of rules. And because it's a volatility or VIX ETN, this is one in which you buy what looks to be a catastrophic low bounce off a whole number. And I bought it right here on the bounce today. And I sold not at the exact top, but I think it was like 46.20 or something on this pullback. Because I know you sell the rally, you buy the dips, sell the rallies in TVIX. Anyway, side note. When they do move nicely, another good when they move is UWT versus DWT, the crude long and short, right? But they haven't been very aggressive lately. I like the natural gas much better. UGAS versus DGAS. Really nice tradable ranges. Look at the range, 58 to 74. Like 15 points or whatever. So there's some money to be made or lost within those ranges. TVIX had its nice big epic run. By the way, TVIX, you almost never buy the first breakout. Remember I said that. I've been trading made thousands of trades in this thing over the years. Never buy the first breakout. It's usually a fake out. What I mean by that is, and by the way, do what we call in manufacturing and engineering quality management characterization. What's the typical trading ranges? Like Harry had alluded to also, and Harry's so brilliant. I could listen to that guy for hours and hours. He's so brilliant. I learned so much from Harry Boxer. I don't say that about hardly anyone else, so that's saying something. Now, this guy's been on the downtick. What you don't do is buy the first breakout in TVIX. Or if you do buy the first open range breakout, be quick to sell at the first sign of trouble. Usually the first breakout is a fake out. First breakout, fake out. Well, it's not a breakout. First breakout, fake out. If you swing or day trade TQs, on the other hand, TQs buying new highs or buying off pivot lows usually pays off as well. So look for those kind of patterns to repeat themselves as an active trader. My favorite pattern is always this one that we saw, which is why I was trading this successfully yesterday, where you've got such a cool ass cursor, right? What a cool cursor. Looks like something out of Star Trek. But anyway, the point is, small gaps. See, it closed here, it gapped up there. The bullish cup was there. The buy signal, I forgot where I bought this guy. It was like 41.30, 41.40. And I usually sell into whole numbers. So if it gets close to, say, 42 and starts to pull back, I'll sell it right there. I don't remember offhand where I sold it, but the minor gaps that continue are the number one pattern to play. And do be aware that these are volatile instruments. Okay, that about wraps me up. I don't have too much else to say. I run Trading the Open for 20 years. It's a long-ass time, isn't it? There must be something there. And I'm deeply grateful to all of you who have found value in working with me over the years. I'm a no BS real money trader. If you go to tradingtheopen.com, you'll see screen cap proof. I spent nearly $10,000 in commissions the last 3 months alone for Fidelity. Well worth it, but I am a real trader, and I show screen cap proof of being such. Anyway, volatile charts are out there. Money's to be made and lost. It's all about using tight stops, intelligent risk management. I'm not really good at letting my winners run, I'll be honest. I sell the first sign of trouble. My biggest failure as a trader is not taking big stops. I don't take big stops anymore, ever, period, ever. I'm really, really good at taking itty-bitty, super tiny stop losses. But my biggest failure as a trader is that I never got comfortable trading, 2,000 or 3,000 shares at a time. So I'm limited in terms of my income potential because, I've done millions in sales for my business. I've not done millions in wins from my trades because I trade such small blink in size, I think my best year trading, I only made like 16 grand. So that's my biggest failure. And the reason I share that with you is I'm completely transparent and very honest, is even if you get to break-even trading, there's no guarantee that you'll then get the, for lack of better words, this courage, I guess, or comfort zone. I play tournament poker in Vegas a lot, and I won my first tournament 6 years ago. But I still play micros. I still play 1, 2, and 5, 10. I don't play 100, 200, no limit, $6,000 pots or anything. I'm not that guy. I'm just not comfortable doing that. I'd love to hear any thoughts from those of you who are comfortable trading $2,000 or $3,000 of a $30 or $40 stock and putting on $200,000 or $300,000 bets, calculated bets and great charts. That's what's kept me from being. I'm a good trader. I'm not a great trader until I, show proof of making millions trading large size. So my point, just to share with you from one friend to another, is be patient with yourself, right? I've been trading for over 20 years. Harry's been trading longer than I have. He's a great guy to learn from. Anyway, I hope this gives you some insight. Last thought, the final thought is, one thing I'm starting to do is put on small, usually under 100 share trades in our inverses right now because they've sold down. They've come back so far, right? Like TVIX, my favorite. It went way the heck up. We got a shooting star, right? Shooting star marked out the exact top, which is why I didn't buy for swings up there. And that kept me correctly out of trouble. And thanks to my colleague Steve Nissen for help with candlestick charts. The only person you need to learn candles from. Anyway, this guy cycles up and down, way the F up, way the F down. Do you think there might be a bounce in its future? I certainly do, and I'll be putting on some size if this guy breaks over this. I also like trading SQQQ. I bought some of that today for potential pivot. So my point is, be aware that the inverses may be due for a pivot and, get ready to rock and roll. We've got lots of them out there. Look at the upside potential in these guys. Like LabD broke support. I don't want to touch it unless it gets back over 30 with any kind of size. But it had been a $60 ETF just a few short weeks ago. I'm sorry, let me put the scale of measurement. This is just a 3-month chart. So, and of course my favorite instrument being TVIX because the upside 45 to 80 could double. So anyway, thanks friends for being here. I do appreciate it. I hope that you guys make bigger winning trades more often, a way of life. Canopy growth has been one of my favorites too. I got kind of a love-hate relationship with it. When it works great. When it doesn't, I take stops. Anyways, you can join me at tradingopen.com. Try it out if you want. I'm a division of my Day Trading University site. You may see me everywhere. It's been a real pleasure sharing the stage with Harry Boxer. He's brilliant. He's the only other guy I'd recommend learning from in a trading room. He is. That's God's honest truth. I've seen virtually every room out there, and most of the people, especially these young kids who advocate trading thinly traded, you're not going to become the next penny stock millionaire. Hate to break it to you. You're not going to make $6,000 as some overseas brokerage account trading crap. You need to learn how to trade good breakouts with people like Harry Boxer and myself. So try us out. I recommend both of us. I think we both know a thing or two, and wanted to wish all the best. So here's to bigger winners more often. Have a great 2019 ahead. Try out both Harry at thetechtrader.com and myself at trademastery.com or tradingopen.com. I'll see you guys next time. Oh, hey, you're welcome. Wow, all these great comments. I appreciate it. Good point, Mark, about income sources. Yeah, the more I see and handle, the more comfortable I get with amounts crossing your line. Yeah, that's actually a good point, man. That's like a tip I got from the world's best marketing expert, Dan Kennedy, who said something like, don't have coupons around, have $100 bills around, have positive anchors. And I completely agree with that, and I did that. I don't use coupons. The wife does, much to my chagrin. So, honey, we're rich. You don't need frickin' coupons, but she loves coupons, so I indulge her. But I like putting Benjamins on. In fact, I have gold coins. I collect the gold nobles and sovereigns, and I have gold coins unprotected just sitting around me. It's just kind of fun. Anyway, wealth anchors really helps. Anyway, you guys have been great. Thanks so much for being here. I'll get the recording out to you. GoToWebinar will send you a link. Take care and best wishes for success. Bye for now. And thanks for the smart words and kind comments. I appreciate it.